Good afternoon. Today, I think something new topic we are going to discuss, audit of loans and advances. Uh, I know that the audit word itself, people don't like to hear, but still we need to live with this as well. Uh, all your hard work, everything, once a year, once in 2 years, auditors come and audit. Normally, in general, people hate auditing. So if I am in the business, I too would be same. But still, it's something like we need to understand what is the audit function is all about. Why the banking environment set internal audit function. So I will give a brief introduction. What is the auditing, internal auditing, and how you can prepare for the audit, and what is the internal audit objective is all about. People think auditors come and find lapses and all the observation, but still you want to see that audit. You can use internal audit function as support to your own business. The auditing subject has been changed over the period of time. Uh, Even though those days people think it as a ticking job, that era is over. Now, auditing people see as the partner of the business. To achieve the business objectives, people use the internal audit function. Okay, let's move to the presentation. Okay, you can see Charita Jayavikrama, Chief Internal Auditor of Sampath Bank. So I have been there in this field for past more than 20 years. Prior to that, I'm like all others. I also start up with the branches and several other departments. So I can feel, I know how the business feel, how difficult the business is. Even though now I'm in the internal audit, I can wear your shoes and think about from your point of view how difficult your job is. That is the difference between straight away coming to the internal audit and being in several years in the business and then come to the internal audit function. I would like this session to conduct as interactive session. You may ask questions and you can the way like you can change the pattern of the presentation also. If you need to discuss certain things in particular, you can ask questions. Okay, then let's move to the presentation. So what is auditing? So people think, sometimes people all are think that that people have very narrow down definition on auditing. Set of people come even without informing on surprise basis early in the morning, even prior to you come to the branch or your department, auditors are there. So that is the most worst day, maybe worst day in your life. So seeing the auditors early in the morning. So, but still we just think about what is auditing. So auditors are, you all are doing your job every day, but auditors are coming and they will come and look at your job with their eye independently. They should be independent. They come and independently verify your processes. Sometimes when you are doing the same job, you think that you are doing the correct thing, you are following the correct controls, and the what you are doing is the correct way and the best way. But when someone else come and look at your function, then only the third party only feel that sometimes you are not following correct procedures, proper controls are not there, and also sometimes inefficiencies also can be there. Auditing is not that all the time come and put controls. I'm talking about what I am doing at my audit department, what I have done in the past in my audit department. So not only that we are putting controls, sometimes if you are following too much of controls, we will recommend the lenient way as well. For example, say basic example, if system give you a report and over and above the system report, you are maintaining manual registers. In that case, no point to maintaining a manual register. In that case, we recommend you can go ahead with the system report. That kind of auditing should be not only putting controls, give the recommendations to put control, but also to improve the efficiency and effectiveness of the process. We can recommend to reduce controls as well. I don't know anyone of you all have that kind of experience with your own auditors, but auditing should be that we need to support to achieve your objective more efficiently and effectively. In general, auditing is independent function. They come and check what you are doing, and sometimes that auditors do overall audit. We take the entire portfolio and audit. At times, it can be part of the portfolio, and some that auditors are they are checking whether you are following regulatory framework, all the guidelines set by the regulator, which is central bank, and also the guidelines set by on your own within the bank. Operations department, credit policy department, they can set controls. Auditor's job is to come and look whether you are following those regulatory framework, internal policies and procedures. So over and above only what I said earlier, over and above, we can look at the inefficiencies in the process, and also the bank set control, whether bank set controls are adequate enough. That is, in a nutshell, that is auditing. So what is internal auditing? Internal auditing is we are independent within the organization, and I will explain the structure. We come and we independently review those whether you are following these procedures. So that if you go to the definition in theory, it helps an organization accomplish its objectives by bringing a systematic discipline approach to evaluate and improve the effectiveness of the risk management, control, and governance processes. That is the internal audit is all about. So if you willing to know what is the difference between internal auditing and external auditing, I know in this diploma, most advanced people are following, experienced people are following. Just to refresh only, I'm telling these things. Sometimes once you are into this credit subject, sometimes you may forget the other functions. So internal audit is we are reporting to the board audit committee. Why internal audit department head of audit is reporting to the board audit committee? Internal audit must be independent. Otherwise, that we will also put the bias to, if we are to report into the managing director or CEO or corporate management, then we are biased. We are biased to our own appraisals and our promotion. Because of that only, we are reporting to board audit committee. Board audit committee consists of non-executive directors within the board of directors. Non-executive directors are they are not taking executive decisions, and chairman of the audit committee must be independent too. Independent means they don't have any share ownership and they are not involving business decisions. So head of audit always reporting to chairman of the board audit committee. And if it is external auditors, they are responsible for the shareholders and members of the organization. So independency, when it comes to independent, internal auditors also employees of the company, but still in order to maintain independence only, our reporting line is different. We are not reporting to the management, but to the board audit committee. External auditors are totally external party. Objective of internal audit is to advise management on whether organization has sound system of internal controls. So we will provide assurance that bank is having a proper set of internal controls, or if not, we are recommending to have proper internal control, and we provide adequate recommendation to implement internal control system. But external auditors, they come and they audit financials and to provide opinion whether the financial statements are true and fair view. You may have seen external auditors report in the annual report. I know everyone is reading external auditor's opinion, but in the same annual report, there is a report called Board Audit Committee Report. So in that Board Audit Committee report consists of what are the functions conducted by the internal audit. Scope, our scope determined by the board board audit committee. Board audit committee, annually internal auditors are preparing audit plan. So that is approved by the board audit committee, and the external auditor scope, it's determined by they determine themselves, then what to audit, where to audit, how many branches they visit. That is purely depend on their scope, but their ultimate objective is to provide true and fair view for the financial statement. So qualification, external auditors must be an audit firm consist of chartered accountants. Internal auditors, even though there is no regulated qualification for internal auditors, head of internal audit must be a chartered accountant or accounting background is a must. And audit staff also, they must have finance and auditing background. So always, if we don't have qualified internal auditors at the department, it's very difficult to do audit function, because internal auditors, they should be all rounders. That because internal auditors, that even though external audit function is limited to financials, internal audit function is not limited to financial. We need to look at all the processes. It covers all the department of the bank, all the branches. So treasury, finance, HR, marketing, any department of the bank subject to an internal audit. So in order to provide observation or recommendation, we should be qualified enough. Without having any qualification or background, we cannot go and audit another department and provide recommendation. Then no one will accept those things. There is no value in those recommendations. So always internal audit department people, they must have qualification and some sort of a background to conduct this audit function. People say that if you make some mistake in some other place, those people put into audit department. That era is over now. I also can remember 20-25 years back, if someone make a mistake at branches, that person come and transfer to internal audit department. So how can that person go and audit another department and provide recommendations? People will laugh. So that person was there at that branch and he did this kind of thing. Now he is coming and giving recommendations to us. Because of that, always I know all the head of auditors prefer to have internal auditors with full of qualifications and background. Okay, what are the documentation govern the internal audit? I will brief these things in order to get understanding, because the people perception toward internal auditing is still, I don't think that people have 100% accurate perception towards internal auditing. That is due to various reasons, but it's right time to change your perception. So if you have anything in your mind regarding internal audit, now you can forget those things for a moment and listen to me. So then you will get the correct picture. Maybe because of you may have so far bad experiences, negative experience with audit, and you may think that auditors, they just come and give observation. Your like entire years effort going waste. After auditors come, they will put bad comments. No, that is not internal auditing. The correct internal auditing to support the business. I will prove with the cases, and I will discuss you with the cases, investigations conducted in the industry. Then you will get understanding how you should perform your job. So internal auditing is governed by board audit committee charter. Board audit, I told that we are reporting to a board audit committee. They are governed by the audit committee charter. Terms of reference given by the board of directors. And internal auditors, they have internal audit charter. All the responsibility and authority given by the board audit committee. And internal audit department must have a manual. All the procedures, approaches, everything should be documented. And internal audit always follow risk-based approach. That risk-based auditing model should be documented in the manual. So how internal audit department receive authority? So as I said, if you take internal audit department, we are reporting to the audit committee, and audit committee reporting to the board of directors. Authority coming from board of directors through the terms of reference to the audit committee, and board audit committee, they give the terms of reference to the internal audit department. So head of internal audit is reporting to this line, and dotted line reporting to the managing director, That is only for the administrative purpose. For leave and other stuff, head of internal audit reporting to the managing director. But you know that entire the bank's organization structure is under the managing director. In some banks, CEO, chief executive officer. But internal audit reporting line is different to the any other department of the bank. Internal audit department is reporting to the board audit committee. Okay, you may have heard three lines of defense. What are the three lines of defense? First, second, and third. First line is all the operational management or are belong to the first line of defense. Whether they are corporate management or otherwise, they are belong to first line of defense. They are the owners of the controls. You know, in the bank, you have credit manual, operations manual, those things prepared by the bank staff itself, operations department or credit department, corporate credit department, they are the owners and makers of the manual, and you all are the users of the manual. All the concept you all need to follow. All the makers and users all are belongs to this first line of defense. Why it's first line of defense? Because you are the owners of the control. You set the control and you need to follow the control. And we have second line of defense. Second line of defense consists of risk department and compliance department. Risk department, they will look at the risk of the bank, credit risk, operational risk, and market risk. Compliance department, they will look after the regulatory framework, regulatory side, all the central bank guidelines, whether all the departments are following regulatory framework. So, first line belonging to everyone, second line consists of risk department and compliance department, and third line we have only one as the third line of defense, that is internal audit. So internal audit, like these all first line and second line, all the departments and branches are subject to audit by the third line of defense, internal audit department. So I have given the definition. Internal audit provides assurance that first two lines are adhering corporate governance and internal controls and add value to the bank by providing recommendations to improve efficiency and effectiveness of the business processes. This is very, very important. Internal audit need to provide recommendation to improve efficiency and effectiveness of the business processes. We are not going to write nitty-gritties in the processes. We didn't see numbers, we didn't see signatures, those things, those are compliance audit. More than that, we need to evaluate the overall risk and we need to provide recommendations for you all to improve the efficiency and effectiveness. So what is the risk-based auditing? Risk-based auditing. So if you provide observation to you, we come and audit your function, credit function. I know that different level of bankers are there in this forum. Most of them may have credit experience and you are qualified also. But what is the risk-based auditing? When we are making an observation, so I always tell auditors to ask prior to make the observation. Always ask question why, what if? If we are right in that, we noted that the date of this document is not there. Okay, date is not there. What is the impact? Is there a huge impact? If there is a huge legal impact or other some impact is there, then only you need to write in the report. If date is not there, if you notice that one date is missing in a document, just notify to the management. Look at here, date is not there. Please put the date and sign. So that kind of correction we can do then and there. We don't want to put into audit report those things. Sometimes date may be critical in a legal document. So, but we need, that is critical mistake, but still we need to inform that if that critical mistake is everywhere, whatever, if we take any document that date is missing, then we can make it as an observation. But still, if we can correct some certain things then and there, we should politely ask them to correct them. So we don't want to issue that huge, lengthy audit reports. Some people think that the number of pages are high in the audit report or weight or length is high, that is the great audit. No. it should be risk. We need to identify the risk. If something is not available, so what? We need to ask the question. If something is not available, if it is really critical, then only we need to write it down and we need to allocate a high risk as per the observation. I will explain how we give high, medium, and low risk for the each audit observation. So what are the types of audit? We are conducting several types of audit, branch audits, department audits, and branch and department audits. We conduct on-site audits and off-site audits. Uh, On-site means we visit to the branch. As I said, when you come to the branch or department, auditors are there early in the morning. Very sad to see that auditors are there. That is on site. We visit to the site. We come to your branch. We visit to the branch and audit. That is called on-site audit. And off-site audit is without visiting the branch or department. We conduct and we evaluate certain things from the audit department itself. And online monitoring, without visiting, without telling anyone, we can monitor from the audit department, online real-time monitoring. So and another type is thematic audit. We select one theme at a time and we conduct auditing. What is thematic? Thematic, for example, say that recent most common this thing, moratorium. Moratorium, we select moratorium loans as a theme. We audit that whether all the branches have followed the correct procedures as per the regulatory guidelines. So without visiting any place, we take entire moratorium portfolio and we can audit. And central monitoring. Centrally, we can monitor certain things. Remotely, we can monitor. For that, what we are using is computer assisted audit techniques, CAAT. And also, all the audit departments, including Sampath Bank, we have a separate software called ACL, Audit Command Language. From the audit command language, we can download entire database to the ACL. From your core banking system, end of the day, we can download full set of data to the ACL. So other subsystems also we can, anyway, that if you certain banks have for leasing one system, phoning another system, treasury some separate system, all the system end of the day uploaded to the core banking system, whether it's Pinnacle or Temenos or whatever. So that from that core banking system, we download to the ACL system. So audit command language, we can download the entire database. From that, we can do whatever analytics we want. So for that analytics, we write our certain logics and we can generate report, we can monitor. So visiting to a branch and department auditing, actually that is kind of a dying thing. We don't want to visit. In order to maintain the surprise element and the interaction with the auditee, we visit, and central bank also expect that. Because of that only, we are still continuing on-site auditing. And but through other things, we can find a lot of mistakes, and data analytics, we can prove the things with the data analytics. So past, that 2021 and 2022, we were not able to visit branches with the COVID pandemic and also the travel restrictions. We were not able to visit branches, but still our work continued. We thorough this off-site auditing. We expanded the scope of online monitoring, and we further expanded thematic auditing and central monitoring. So people think that thank God auditors are not coming to our branch, but still our monitoring have not stopped. We are monitoring. That is not for anything, but to the betterment of the bank. We are monitoring stuff. We are monitoring your branches remotely. So that is what we are practicing. I hope that all the banks all are practicing this kind of monitoring from the back end. So further types of auditing are there. Process audit. So if you take the credit process, we can take the credit process at once and we can audit. So how we can do it? Like if you take the credit as an example, from the time that customer hand over credit loan application to the time entire process after passing, and if customer going to non-performing, it will pass to the recoveries and take legal action. The credit granting process up to the point legal action, the entire process we can audit at once. You know that for that process, several departments or branches are involving. Customer come to the branch and branch does one part. In certain branches, credit processing and execution centralized. It will go to the central credit department and facility granted. And then customer is paying, installments are paying monthly. At one point, customer going to non-performing. Then what happened to after non-performing? After that, it will pass to another department, recoveries department. After when the recovery action also fail, it will pass to the legal action department. Then legal department take legal action. If you take this entire process as one, we can identify ineffectiveness and inefficiencies. So otherwise, we go to the branches, we audit that part. And we go to the credit department, we audit that part. And recoveries department is separate and legal department is separate. Always people are trying to pass the ball to the other department. That mistake done by the front line. Recoveries department is saying no, that file just passed, we have taken recovery action. Legal department is saying, so once file pass to the legal department, then only our work start. If we take this entire process as once, so we can identify with like whether it's a credit decision, something wrong with the credit decision, or how we can improve the process. Sometimes to grant a facility, how many days these branches have taken, how many days central department has taken. Once file passed to the recoveries department, how many months and years they have taken and recoveries. So entire timeline we can look at, and inefficiencies we can look at. In between, sometimes files are misplaced also in certain cases. Once branch passed to the recoveries department, there is no record. Branches in the understanding that file is at recoveries department. Recoveries department does not have anything. Sometimes file is in transit. So if you take the entire process, we can identify those loopholes, and we can identify delays, and we can provide recommendation to improve the efficiencies. That is called process audit. And spot audit. What is spot audit? So that is based on sudden requirement, we can go and visit the branch. Certain times we are getting tips from the branches. You know, all the banks are having whistleblowing policy. If something goes wrong, people can call to the head of internal audit or any board audit committee or someone send a mail that this kind of thing happened. Sometimes people call and please come and look at this credit file, that file is missing. That kind of tips we are getting. So for those things, we need to immediately react. Those are called spot audit. We suddenly visit to a branch and look at something, not only for credit. Sometimes some people can call us and tell there is 100,000 cash shortage, branch is not divulging that. So we suddenly visit. Not only for those things, sometimes when branch managers are changing, sometimes that I told you that from the back end, we are checking so many things, central monitoring and offsite checking. So when we are checking certain things, if we noted that unusual patterns and unusual practices, so when we are checking centrally, if we notice that one branch is always close their business at 8 o'clock, 9 o'clock, it's something abnormal. So we just have a visit and see that what's really wrong with this branch. Or sometimes when we are centrally look at, we see that huge number of credit facilities, personal loans facilities, portfolio is increasing rapidly. So while other branches cannot achieve their own target. So yes, it's good that if one branch is achieving the target, but still being auditors, we need to put some attention how they achieve this target. So those cases we just visit and have a look at how whether it's a genuine case or otherwise internal auditors visit and see. So and also anti-fraud monitoring, internal auditors, which that based on the patterns and the volumes, internal audit department through the ACL, audit command language, data analytics, we can look at whether something is wrong with some branches. You know, most common thing is when it's come to cashback facilities, people are playing with the cashback facilities. People are providing cashback facilities against a third party deposit. Sometimes deposit holder is not aware. So that kind of fraudulent activities had happened in the industry. Most popular cases are there in the recent past. So we monitor those things. Those are called anti-fraud. Prior to happen something, we look at what are the fraud vulnerable areas, and we monitor, which is called anti-fraud monitoring and evergreening. So certain times when we visit to a branch, we cannot detect everything. But when we are monitoring centrally, we can look at that, some customers are granted the credit overdraft. When it reaches to like 90 days, it will get settled prior to go to the non-performing. So how it settle, if you look at the entire entries, we can see that through a fund transfer, that person gets settled. The second person, when that second person reaches the 30 days, it will get settled by another party. So branches always prefer to have set of customers, kind of a group, and they are passing funds here and there, and they don't want to show that their branches fall into non-performing. And with the support of customers and with the support of money lenders or poli modalali, that they have set of people. I will explain a case at the latter part of the presentation. That kind of things, that kind of patterns we can monitor through the data analytics through anti-fraud monitoring. And we have system audit. All the banks having system audit. They monitor the system and application control, physical control, data security, that part, everything is looked after by the system audit. Those are the types of audit we are conducting in general in all the banks. If I explain in my experience at Sampath Bank, we are practicing all these concepts of auditing. Hope you all are clear up to now. Okay, let's know the risk assessment of an audit finding. So in your audit report, you may have seen that audit report, certain comments the auditor has given as high risk, certain things as medium, certain things as low. So sometimes you may feel that how they have given this. Always people argue why this is high, why can't you give it as low? So this, I have given this an example only. All the banks are using any sort of risk matrices. This is a common risk matrix. This is called 25 risk matrix. So here, this side, you can see the likelihood, and the other side, you can see the significance, right? So if likelihood means number of instances, and significance is the impact. Likelihood means number of instances, and other side is impact. Say that, for example, without taking credit, we'll take simple example. When auditors visit, they count teller boxes, teller cash counters. When counting a teller cash, auditor noticed a shortage of 100 rupees. Okay, 100 rupees kind of a negligible, right? So as a value, it's negligible. So when look at that as 100 rupee auditors, we cannot just ignore. It can be a difference between huge, large balances. So we'll study what is this difference of 100 rupees. So we look at that, what are the cash shortages, excesses happened by this particular teller in the history. There are no cash excesses and shortages, but 100 rupee sales short. So that teller justified that I didn't have coins, because of that this kind of thing happened. If it is excess, that teller can justify that I put some coins to the teller box. That kind of a justification, if it is acceptable, so its value is impact. Significance and impact is very low. It's 100 rupees. And valid justification also provide. And likelihood, how many times that teller had a shortage for the period or excesses for the period. Say that this is only one instance. So likelihood also very low. Impact also low, likelihood also low. Then that is we can identify as low risk. Sometimes 20, 30 excesses and shortages, we don't even provide the risk rating. Okay, in this case, we will assume that we give that for the audit rating as low. In the same instance, when we count in the teller box, there's 10,000 shortage. 10,000 shortage, value is high. Say that teller limit is 100,000, it's 10%. 10,000, it's high. Impact is high, and likelihood that if that teller is always like that, always teller excesses and shortages are there, so the likelihood also high. In that case, it's an extreme case, we will give as high. If your auditing risk assessment methodology has marking scheme, you can ask from your auditors what is your marking scheme. In our case, we publish this is how we allocate mark. Then auditee is aware how we provide marks. So in this particular case, we put it as extreme. So in order to give this high red area, that those parts shouldn't always be high. For example, say there is a regulatory violation. Central bank has said that you need to, if you take that moratorium, you cannot charge interest on interest. Interest on interest should be zero, but we have charged. Whether it's one case or two cases, that is regulatory violation, straight away we need to give it as high. That kind of cases also there. But most of the other cases, both likelihood and significance should be high to get high risk rating. If it is moderate level, medium, if it is low level, we will provide as low. If you take that credit, if you look at your mortgage bond registration, mortgage bond, it should go and register, come within 1 month. But we noticed that recent past, due to the pandemic, that there's a delay, which is beyond your control. In that case, those delays we were not rated as high. But if you have not done any follow-up, in that case, we have given low or medium. But in certain case, as a practice, that branch never follow up the registration of mortgage bond. So in that case, we put it as high. So that's how we need to give marking as high, medium, or low. That is the risk assessment. So auditors are always right in the report that there should be at least low risk. So anything can be low. Say that one area, we have looked at one area, there are no comments, but still we cannot say risk is zero. So risk is low. When you are walking on the road, there's a risk. Likewise, when you are practicing in the bank, you cannot have zero risk level. Always there's a low risk, but it will go high based on the likelihood and the impact. Okay, so based on the findings, you will get the audit rating. Audit rating also can be high, medium, or low. Certain banks are using some other modules. Some are give very good, satisfactory, unsatisfactory. That kind of ratings are always there. Anyway, if it is unsatisfactory, means high, and very good is low. So always audit rating come as high, medium, and low. So let's move what we are auditing, how we are auditing. When it's come to credit audit, I will touch credit side today. And once auditors visit, not prior to check the credit files, they look at the other general observation as well. Auditors come early morning. That is not for anything, because they need to identify any risk are there, physical control risk are there. So otherwise, auditors also like to have a good sleep and come around 10, 10:30. No, whatever, whether it's outstation or not, auditors are there at 7 o'clock, 7 a.m. in the morning. So they just walk into the branch and they look at here and there. Sometimes we can see credit file tabs are open. Tabs are open and keys also in the key holder, and anyone can access. So it's a very high risk. Sometimes credit files are outside on the table, credit officer's table. So those are high risk audit findings. So sometimes everything is closed, but key is at open area. So that is very, very high. Sometimes we can see fund transfer, sign complete fund transfer forms are outside. So those things we consider as high risk. If something goes wrong, that one fraudster is there, so anything could happen. So these things, so safekeeping and key handling, we check, and if it is risk, we maintain as key. Sometimes that key hold is on annual leave, but key is under the same person name. So then something goes wrong, who will take the responsibility? That key holder whose name is in the register has to take the responsibility. So it's very, very critical that on the date of audit, always all are following dual control. When auditors are not there, we know that both keys handled by one person, and both keys are under the one person's custody. We know that how it's happening. I told you that I also from branches. I had my initial experiences in branches. So when we are like practicing, so you know that branches are working as a family. Normally people call Ayya, Akka, Nangi, Malli. So we working as a family. No, everyone that we trust each and everyone. Without having trust, we can't operate also. But we need to have some percentage of suspicious also, because fraudulent activities are happening in the industry. Those are increasing daily. So if we are living in a fraud-free culture, that all are 100% genuine, those controls there's no meaning of having these controls. But industry investigations, fraudulent activities are increasing. We have chief internal auditors forum in the industry. The forum share the investigation findings in the each bank. So we know because of that in each bank, fraudulent activities are increasing. Sometimes you may not aware because that internal audit very confidentially handle those things and don't share with other members. So because of that, people don't know what could go wrong. I always, that it's sad to say, but always you need to think about someone in your department or your branch. There can be a fraudster. Some person can be a with some intention. So if someone, even though someone doesn't have any intention, if you have access to something, the fund transfer form is freely available on the table. So they tend to do some certain things. Because of that, you need to keep in mind these controls, not for the sake of having, not just to show the auditors, but you have to follow. So if something goes wrong, first thing to look at is the controls, whether you have followed the controls. So because of that, not on the date of audit or when the auditors are coming, but always you need to follow this control. Otherwise, you are taking and running with the risk. In that case, if you get caught to fraudulent activities, you don't have any excuse. So physical control is very, very important. And the younger generation is they are very intelligent. So recently I heard that one young chap, not in my bank, industry when we are sharing, he has prepared the same identical phoning cash deposit slip. So that person give customer to the cash slip prepared by himself. In the voucher bundle, there's a original one. So two different amounts are there in both these things. So say that customer phone for 50,000 worth of article. In his slip, he fill as 45,000. Customer is getting only 45,000. So sorry, the other way around. The 50,000 worth of this thing, yeah, right in 45, 5,000 he pocketed out, and customer is getting a lesser amount. So likewise, that continuously that person was doing that recent one. But still, what I must tell is, whatever, like, fraudsters cannot continuously do these things. One point these get caught by that time, but other innocent people also have to suffer. So because of that, any single control you will need to follow. Sometimes the most common thing is sharing password. Since you feel like your colleagues as your family, you share password. So at one moment that some person wants to take money, they use both password and take out some money. So just fill the deposit withdrawal slip. You know, that tellers are very familiar with the customers who are having huge money. They just fill the withdrawal slip and post and verify with the officer's password, and they pocket it out. So if I am to tell these kind of cases, I can tell you all like 1,000 odd cases, but I'm just touching basic stuff. These physical controls are very, very important. Safekeeping and key handling, very, very important. When we walking into the branch or department early in the morning, these things we can observe. So, and cache areas, we can see teller keys are here and there. Under the keyboard, teller keys there. And previous day, last deposit may be in drawer. And those things we can look at in the morning. So because of that, only auditors are walking to the branch early in the morning to find out the controls of the branch. Okay. What is the credit in banking? Okay, what is credit? You know what is credit better than me. So credit facility, the bank balance sheet consists of what is the main key function of the bank: deposit and advances. We take customers' money as deposit and we lend to customers as loans. So in between, from the interest rate difference, bank earn money, bank profit is that. So that is simple as that. That is credit. The balance sheet of the bank consists of this advance. So different types of products are there. So for this, different types of products have different types of documentations and control. So credit is simple as that we provide facilities. For that, we are taking security from the customers. The important aspects are tenor, amount, to whom we are giving, what is the security and procedure, and the approval process. That is the credit decision. So repayment capacity and security is very, very important, where the customer can repay the credit, and what is the security we are taking. So those are critical things. So facility goes bad when recoveries department walk into certain places. Sometimes we can see there is no land, only a muddy place or a river, common river, or sometimes it can be a part of the see, or sometimes that kind of experience also we are having. Sometimes there's a land, but there is no right of way. So that kind of credit things are there. Being the credit officer, you all must visit the security and you need to look at all the road and access and everything. You all need to check. So that is, I'm not going to teach credit, but the things as auditors, what we are looking at, I will share with you. So what is the credit management? Managing when the loan is performing, good terms. So you have given a facility, customer is paying, security is also there, no issue, perfect. So after that, we need to look at do a post evaluation. At the time of giving the credit, everything was perfect, but with the time, certain things can go wrong. We experience this in this since 2019. The good businesses, good business people, their credit had gone wrong, like when non-performing due to environmental factors and pandemic and so many reasons. So time to time, we need to evaluate the customers' credit reviews we need to do on time. And managing when the loan is non-performing with the in bad terms, we need to always do the post valuation and post review of the security. We need to do those things with the credit. So we need to mainly focus security and related documentation. So if something goes wrong, only all the security documentation, everything pull out and see. Then at times, all the time we see something is wrong somewhere. If facility goes wrong, something is wrong somewhere. So I'm telling with my experience, all the documentation are not perfect. Sometimes the responsible person have never visited to the place. So then we were not able to recover these facilities. So with the audit, we check a sample whether completeness of the documentation is there, whether proper security is there, insurance cover is there, but we can check only a sample. We select sample and we check. With the sample also we come out with 101 comments. If we check the 100%, so there can be so many documentation lapses. So documentation is very, very critical. And these are credit audit is all about that. We come and we audit the process. So here I'm saying that it is an insurance to cushion the credit risk. We need to minimize the credit risk. We need to have insurance. Security only act as a psychological support to the bank and pressure onto the borrower. It is a safety need to be called upon only in the event and unfortunate inability to repay. Okay, sometimes cash buildups. Cash buildups we need to that credit approving authority put a comment that cash buildup to be maintained. So how some people create the cash buildup? They just overdraw one account and create a cash buildup. So there is no point. OD customer account or drawing customer account create a cash buildup. And sometimes people give OD facilities against the cash buildup also. Sometimes if system does not restrict, we have noticed that customer giving facilities against the cash buildup account as well. Okay. These are the types of credit facilities, term loan, overdraft, personal, housing. These are common to any bank. I have selected only common credit facilities. Whatever names you tell, if you listen to advertisement, various names are there in the industry, bank to bank, different products are there. But same product only we are selling with, we are marketing with different names. So these products are common to any bank. So term loan or overdraft. So this presentation I will share you as a note. So all the under each facility, what are the security documents required, I have given here, and also and what are the matters to be considered, what are the areas, being auditors, what are the areas we look at, also we consider here. So if you take one as an example, if it is a term loan, facility application, approval, letter of credit, loan overdraft agreement, standing order to debit payment account, crib report, those are must. So matters to be considered, we look at whether signature is there, applicant signature, date and completeness, approval, and borrower's data, and witness, date of recovery, loan installment, other everything we look at one by one. So mainly we will give key attention the approving parties conditions. When credit facility up to certain level, a branch manager can approve, and after that your regional manager, zonal manager can approve, and then go to a credit committee. Credit risk department put their comment. Sometimes it go to the broad credit committee level. So in this, most of the time, all the banks are following. That is happening through the system. Maybe a lot of systems are there in the market. In that system, when you go through, we can look at who is the approving party. And approving parties conditions also we can look at. Being auditors, we are not going to criticize the credit decision, because if you are recommend a credit facility, board or credit committee or credit committee has approved it. It's a collective decision. So being auditors, we cannot go and tell suddenly, why did you give this credit facility? So because internal auditors we are not credit expert. So we are not going to challenge the credit decision, but say that the credit exposure is, that bank credit of exposure is 65%. If it is that in particular facility, it has gone more than 80%, 90%. In that case, we look at how this decision has taken, who has taken this decision. If it is credit committee, then we look at what are the comments given by them. So we can't say that credit committee can't approve these things, but we look at the comments. Credit committee, normally credit committee approved this much of percentage exposure subject to certain things. We look at whether the particular branch or the particular relationship officer has followed these conditions. Always they put a cash buildup must be there, and some sort of a documentation should be obtained. We always look, being auditors, we always look our attention to the approver's notes. If what approver has said, whether branch and credit officer has followed that part, we put a critical attention to that. Even though it's a credit decision based on certain things, we look at whether those certain things have achieved. So always you need to keep in mind, if approving authority has put a condition, you need to act upon it. If it is not practical, sometimes approving authority always put that cash to maintain cash. I'm telling as an example. Always they approve with an cash build-up account. In this kind of environment, let's say pandemic period, the customer cannot pay their installment at least. How can customer can have a cash build-up account? So it's not practical in certain areas. In that case, you cannot think and you can't take decision, but you need to go back to the approving party and explain, for this 6 months or 3 months or 1 year's period, customer cannot have a cash build-up account, but still customer can repay the amount. So because of that, please remove this condition for this much of period. That kind of agreement you must have with the approving authority. Otherwise, you suddenly decision, you cannot think that these people are crazy. How come they ask us to have a cash build-up account? I'm not going to. No, you cannot decide, because approving party is someone higher level. Based on that only they have approved. So you don't take unnecessary risk. People, we all are working for the bank. You don't want to take unnecessary risk, which is beyond your control. You need to go to the approving authority, look, approver, see that this condition we cannot complete. Please, we need to remove for the remove. Please make a note that after 6 months only we will have this. Sometimes people recommend you need to have Gram Seva, some document, you need to have this thing and that thing. With sometimes those are not maybe not practical to nowadays. Sometimes approving authority is someone higher senior than, number of years senior than us. They may are still following procedures they followed at some years back. So because of that, you need to have a negotiation with the approving party. But you cannot just eliminate approvers' conditions, because being auditors, we don't have any power. Only thing is, first line of defense has set guidelines. We go and look at whether you are following these guidelines. So if you are, so guidelines are there, but still there's a room to deviate, or exceptions can be made. Always you cannot follow to the dot. All the guidelines you cannot follow to the dot. But you can have a deviation or exception. For that, you need to have a higher level approval. People are missing that point. People think auditors are traditional and auditors are very theoretical. But we are not practical, and we are practical and we are flexible, and we know the practical situation. But the other officers, they are not following the practical way to avoid any audit observation. So simple thing you can do is go back to the approving authority and have a negotiation and put a remark, or obtain approval and put into the file. If approval is there, we are not worrying about that. Credit decision has taken and approving party has given some leeway to this facility. Okay, we don't want to worry. So because of that, sometimes when you see credit audit comments, you hate auditors, but people are not doing what they supposed to do. Okay, here this term loans, security documentation, those are continuing. So, and here sometimes legal officers also have some responsibilities. So once they done a mortgage, and they need to in some banks, that is particular lawyer's responsibility up to the level of get the registered mortgage bond is coming to the bank. But in some cases that is not. But based on your procedures and policies and procedures, you need to help responsible the legal officers. You can't just say that legal officer has not done. If legal officer has not done what they're supposed to do, you at least you should have some approval. Follow up. you need to follow up with the legal officer. Some sort of attempt you need to make. So that some people are thinking, okay, that is legal officer's responsibility. I don't want to worry. But finally, that property is mortgaged to the bank is at a risk, that belongs to facility belongs to your books, then you need to put some attempt to follow. Sometimes panel lawyers are doing, so they are not officers of the bank. So they are panel lawyers of the all the banks. Sometimes they accept all the workload. Sometimes they cannot handle, but still, if they are responsibility, we should have some follow-up mechanism within the bank. Being auditors, if there are huge delays, we write. So at that point, people cannot argue with audit that that is not our responsibility. You should prove with some follow-up, because finally, it's bank is at a risk. So always auditors we look at whether bank is at a risk as a branch, whether you are at a risk, and as a bank, what is the risk to the bank. So because of that, you always need to follow up with legal officers as well. And sometimes in certain banks, they said that they never pay to the legal officers until the process is completed. So in some bank, upfront we pay, then follow-up procedure is not happening. So as per your procedure, you all need to do this follow-up, and or you may delay the payment until everything is completed. Okay, if you if you take term loans, the various type of term loans are there. So here, like if you go to the, I'm starting from one for security documentation. It's go up to go on and on, right? So you can see that if there can be certain beginners to credit, then you can follow this. You can have some idea what are the documentation required and what are the matters to be considered. Under each document, what are the things you need to consider. If it is application, what are the things? If it is approval, if it is a letter of offer, and if it's a OD agreement and CRIB report, title acceptance. So likewise, under each thing, we have given what are the things to be considered. So if you take valuation report is very, very important. So sometimes, all the time, if it's if the facility goes to the recoveries department, and if they take, when they take fresh valuation, it's totally different to the original one. So sometimes I have come across some situation. So branch valuation report is one thing, and at the review, the valuation is something else. Third review value is something else. When it goes to recoveries department, and totally different valuation. So so you need to keep eye on valuers as well. Sometimes valuers also, they are all are, I'm not certain people are not genuine. So they are play for the customer side. So you, if you are the credit officer, you all need to visit to the place, and you need to apply your general knowledge and common sense, and you need to look at what are the market prices and all. Otherwise, finally, you have to provide the explanation to the audit. So why this valuation is wrong and all. So sometimes, recently I came across a case that original building plan was not there. When recoveries was trying to take in recovery action, original building plan was not there. So because of that, they couldn't sell at the real price, because the loan granted square feet level and the final recovery department level values square feet are totally different. So because of that, they couldn't recover the loan, at least half, because of that. So sometimes building plans, you obtain the original building plan. Sometimes customer recall the building plan for certain things, and you will give it back to the customers and forget to follow it up. So I will discuss those things with the common audit findings. So all the times, what we see as auditors. So I don't think I need to go one by one in the credit documentation, since I'm going to share with you all, unless otherwise you all have any questions. So then we move to the housing loan. Housing loan documentations are there, and lease and hire purchase, letter of guarantee, factoring, everything is there. We'll take a small break and we'll come back with some facilities and documentation, and then let's move to the common audit findings, what we have noticed with our audits. We'll take a 15-minute break. Thank you. Dear participants, do you all have any questions? You may ask. You can unmute your mic and ask any question. Don't feel free to ask any question. Can anyone tell? Can you all hear me?
Yes, miss.
Right. Do you all have any questions, like from audit point of view? If you have anything to ask, you are free to ask anything. Because for this credit diploma, this advanced diploma, this is first time we are conducting audit session. So what kind of expectations you all have, and these things you may ask anything until others join after the break. The people who are there, you can ask any question. Whether you all like to hear any case studies rather than discuss on theory. So those things you can ask. Any participants are there from internal audit area? Okay, then and there also you can, if you have anything, you can ask. So with it's 2:55, exactly 15 years break is over. I'll go back to the presentation. So if someone can tell me that whether I need to explain the documentation under each product, or can I straight away go back to the common audit findings? I would like your participation, your interaction. As I earlier said, under each product, I have given what are the documentation you need, and under each documentation, what are the things to be considered. Those things I have given under each product. So if someone want me to explain these things, I can explain, or I can share this thing for your reference, and I can start up with the common audit findings. Feel free to comment. Any suggestion?
It's okay. You may proceed with the common audit findings.
Right.
It's okay.
Thank you. Okay. Okay. So as I said, no one like to see audit report, including me. If I am in the business, I hate to see auditors or audit report. That is common. So, but as I always tell, you can make use of audit function, auditors, for your own benefit. People miss that point always. So if you have anything, any doubt, you can ask auditors. And also that if you have like, if you feel that some processes are lengthy and some processes are not necessary, those things also you may refer to audit and ask whether this process that auditors are not recommending any processes. Auditors are not recommending any guidelines. Guidelines also set by your own departments. As I said, first line of defense, those are not set. Sometimes people misunderstand that auditors are setting guidelines. No, it's control management. They are at the first line are setting the guideline. So certain things, sometimes people call us and ask, can you come and do audit? So then they will upfront, they will identify what are the mistakes they do and all. So there are some that kind of people also are there. Those are the people who make use of audit. So they invite audit and get them audited, even though there is a bad audit rating for the first time. After that, they can rectify their stuff and move on. So most of the bank, I know the performance appraisal, there is a allocate number allocated for the in audit rating. So it's common to most of the bank now. Your appraisal represents certain percentage for the audit rating. So because of that, it's critical for you all to get good audit rating. So even though that decision is not the internal audit, that internal auditors are not saying that it should be considered to the performance appraisal. It's management decision. That is to improve the controls of the branches or departments. Otherwise, say that if you are doing very well, if you achieve all the target and you'll have achieved maybe beyond the target, but times if something happens, some fraudulent activity happen, so all the efforts will go like waste. Because of that, without taking high risk, without taking high deviation, so you need to get down the auditors and ask them to do an audit and then rectify yourself and move forward. Sometimes that because that why management has put some percentage to the appraisal. So in the that is the nature of human beings, that if something personally impact you, then only people tend to follow the procedures. So how personal impact, some at times your promotion, your increment, your bonus depending on your appraisal. So when the audit rating is taking into consideration to your appraisal, then people put some effort to rectify. So that part beyond the internal audit is not saying that it should be considered for the promotion or appraisal, whatever. Sometimes I get some complaints in because of audit, I didn't get the promotion. And sometimes people say because of you and we didn't get any bonus this time. So when we are giving the audit rating, I always tell we are going for the risk-based approach. We look at what is the risk to the bank. So based on that only, internal auditors are giving the audit rating. So then when we are providing audit rating, it's purely based on the risk factors. So at that time, internal auditors cannot consider, oh my God, this person's promotion is due this year, whether this man is getting a increment, bonus. If you are going to think all these factors, then auditors also doing a biased job. So we are not doing a biased job. Because of that, we cannot consider when we are giving audit rating, the promotion, increment, bonus, and future everything. So only thing is we are not biased, but we are also flexible. So we know what are the difficulties faced by branches. So we wear branch your shoes when you are conducting the audit. So we always not go to the dot that all the processes and procedure, practical difficulties, practical scenarios also we are taking into the consideration. So that's why I always tell, when there is a violation or deviation, after completing all the documents, if all are providing credit facilities, so the life is easy, your life also easy, our life also easy. But still you cannot improve your advanced portfolio. So at times you need to be flexible, certain deviations to be done. Those deviations you need to do with an approval. That is the only thing auditors are expecting. So those deviations, that policies that people are saying, policies are there to break those policies. Yes, at times you need to break, but you can, that decision to be taken by the authorized person. So that is the only thing. Auditors are flexible, but we are not biased. When providing audit rating, your personal achievements we cannot consider, but if it is impacted to personal achievement of the person, then people are angry with auditors. So that is the normal cycle. So having said that, we'll go and see what are the common lapses. So these are the common lapses. Non-availability of required documentation in the security file. So when we give a sample of file to the auditee, we walk to the branch or maybe corporate credit or other credit department, we request sample files. Then when we open the file, these things are not there in the file. Loan agreement, credit approval, offer letter, mortgage bond, title documents. Those things are not there. But those can be anywhere else. Like it can be in a drawer, it can be in another file, or it can be in the branch manager's drawer. But the comment is those credit documents must be in the credit file. So because why? Otherwise, there's a tend to misplace those documents. So we have come across plenty of instances that these documents have misplaced. So because of that, only once soon after your facility is over, please file this document and it should be put under lock and key. So when they are not in the file, so then people, after we observe, put it down the observation, people come and say that no, you all have written that these are not there. See, these are there in the file. So that is the being the head of audit, that issue was always there at that time. That auditors are saying these documents were not there when they look at the file, and auditee come and say that no, those were there. Auditor has missed that. So to whose side I'm taking at that time? So since auditors are my department staff, should I take my staff side? Or say that it's unfair that always if I take auditor's side, it's unfair. So auditor always will feel that, and auditors are lying, but still head of audit accepting those. To eliminate that, I always tell my auditors soon after these documents are not there, at the same time show to the credit officer and get their signature that those things are not there. Very politely, that we don't want to create unpleasant situation. That is to prove that those documents are not there in the file. Say that first we issue the draft report. Once after coming back to the office, we first issue the draft report. Draft report, we are telling that we put that in this credit files, these documents are not there. After some time you find this document. In that case, you can tell that yes, those were not there in the file at that moment, but we were able to collect those things and we were found in some other area, and these are the documents. You can provide evidence as to the auditors. These are there. If documents are there, risk to the branch, risk to the bank is gone, right? Then earlier documents were not there, comment. But late it was found that there is no risk to the bank. But still that comment we keep in the report to give that lesson to the auditee that these should be filed properly, but there's a chance of misplacement. So because of that, we can keep that comment, but still we can reduce the risk. So that is my thinking. I'm telling you all can't go back to your bank and don't create fight with auditee, but you can have that kind of negotiation. Okay, those are not there. For that you can write, but now these are there. So the risk to the bank is now reduced. So that kind of things, that kind of flexibilities being auditors, we need to adopt, because all are working for the bank. All are working for the bank. All are trying to make some profit to the bank, because these credit facilities, because branch people and credit people are working only I always tell that being auditors, we also getting our salaries, our increment, our bonus because of the business people. So we need to give that respect to them. But so if something is missing, if something goes wrong, no one will be there to your side. Then people first ask, if something goes wrong, the first question the top management is asked, why audit did not pick that? That is very, very common question. So always people try to put auditors are in trouble, you all have not commented this thing. So that is the first question. And second question coming to you, why didn't you follow the procedure? So because of that, to eliminate all these things, it's simple this thing. So you need to file and keep this file and under lock and key. So, but whatever, however, how much we say this, we always come across files with lack of documentation. The credit file should be that on that one tip I can give is ask your subordinate to complete day's work within the day. If something is missing, you need to maintain a register with like pending register. So if something is missing, you can put a date in this file, this document to be collected. Or in from this file, customer has collected the original building plan. We need to follow up and collect. Or if you always maintain a register and follow up, nothing will be missed. So non-availability of original approved billing plan. We always come across this comment. Always come across this comment because at one point you are taking, but customer request for their that they also need this original building plan for certain things. In that case, you need to always keep a copy and put a note that on this date we have handed over, and with the customer you need to follow up. I know you're busy, but still, these things, these tiny things, you need to implement in your branch or department and ask your subordinates to follow these things. Try to face so many huge issues, these things, simple things can do. And number three is failure to adhere to the approving conditions of the facility letter of offer. As I said earlier, we always put attention whether auditee is adhere to the approving conditions. Facility when at the time of approving the facility, the author approver put certain conditions. As I said, conditions you need to adhere to. If you cannot adhere, then you need to go back to the approving authority and tell, look, these things we cannot adhere. For that, we need to have reasonable time because we need to be a bit practical as well. When customers cannot, as I said, when customer cannot pay their installment, when customer is under moratorium, so how can they can have a bill cash build-ups? So that kind of a things you don't want to decide. You need to go to the approving authority and have some sort of a plan. Then auditors are not going to comment on those things. And non-availability of insurance policies. Insurance, first year insurance under each bank through bank assurance we obtain. That second year customer has gone to their own insurance and they can have insurance policy. Only thing is that original policy is not there in the file. So renewal notice we have that insurance renewal not there in the bank custody. So if it is vehicle, no customer run the vehicle without insurance. Only thing is that is not updated in the system. So that follow-up mechanism is very, very important. Insurance policy, the insurance policy reference must be there in the credit file. So that those things in at internal audit we can insurance policy availability update in the system and all we can conduct centrally. We normally we do conduct. We don't go and check each and every file. Centrally we monitor under each product whether availability of recent insurance policies. So we communicate to the heads, then they will follow up. So this is also very, very important to have the insurance because otherwise our asset is not insured. So bank is running with a risk. And non-availability of board resolution for the credit facilities granted to limited liability company. So that is also commonly we notice that board resolution is not there. I know that at times when the board resolution is obtaining, some directors are not in the country and they reluctant to come to the bank, and at the same time all the members very difficult to get together and get the signature. So difficulties are there. Only thing is if you put a note in the pending register, then you can follow up within a reasonable time. To follow up, you cannot take years and months. It should be within the reasonable time. So if one document is not there, you can write to the higher authority, this document is not there. Soon after these directors get back to the country, we will get it completed. If you have put effort, if you have done a follow-up, if you have taken approval, so then auditors are not going to write on these areas. And non-availability of inspection report for stage releasing of credit facilities. So for these things, auditings, that availability of inspection report is a must. Fail to obtain latest audited financial. That is also very, very critical. I know that based on the management accounts and available accounts, you execute the facility, but availability of latest audited financials is a must. The availability of latest audited financial will impact at the review also for the audit rate, like interest rate also. So always we have under the risk customer categorization. So when customer categorization, audited financial is one criteria, so it will allocate some marks. So customer categorization will impacted with this. If customer categorization go down, then customer has to pay higher interest. So even though audited financial is, if you take as one fact, it's nothing. But if you look at the whole picture, it will have an impact to the when deciding the interest rates of the customer. So availability of audited financial is must because of that. Non-sending charge document to the registrar of companies within 21 days. So as I said, this should be sent to the registrar of companies, and then company registrar registration is a must to this documentation. So those little things we tend to forget. It's natural. So the solution we have given, or it suggested these things, though should be included in a pending register. Pending not only included, but someone need to follow up. And fail to follow up and obtain Form 12, and that is also common. Fail to inform mortgage property details to relevant local authorities. It should be informed to the local authorities, mortgage property details. And once the facility granted, people think that's it. No, after granted also certain things we need to follow up. Fail to obtain follow up the completed letter of granted facilities. Not sending lease factoring agreement for attestation, and this again factoring and attestation, it's a must. Those reports will go to the board level. Sometimes half filled documentation go for the board level. So because of that, these things we need to complete. Fail to maintain pending document register. The last item is very, very critical. Fail to maintain pending document register. Pending document register also pending. That is the most common lapse. If you maintain pending document register meaningfully, so most of the lapses you can avoid. So if you are not maintaining for the moment, please implement it, but it should be maintained meaningfully. So once we identify common lapses, so then in addition to that, what we are doing at internal audit is we look at the root causes. Root causes, the reasons we are not being auditors, we are not going to put that. Otherwise, we also give the findings. Root cause also we are giving. It's not fair. So because of that, we share these things with the relevant corporate head for them to come up with the root cause. So then they come up with why people are not taking this. They come up with the root causes. So we are doing root cause analysis carried out at the end of each audit series of audit. So after we conducting a series of audit, and we share common findings with the business people, and they need to come up with root causes, and internal audit make recommendation to address the real causes as opposed to surface the problem. So then if they come up with real root cause, this was happened due to this, then we can provide the recommendation how they can overcome this issue. So that cash build-up is one of the issues came up recently. So that if they are telling that it's not practical, so we requested corporate management to take decision, like whether to, what they are suggesting instead of having cash build-up account during this moratorium. What can the solution they can give? So they come up with their root causes, and we can provide certain recommendation, our inputs, and we can overcome these findings. Subsequent discussion will be held with the respective corporate management member to get their comments and action plan for recommendation along with the target date. So always auditors' job is not each year we go and write and provide recommendation. That's it. Auditors' job is not end with that. So no point that all the time we are writing, all the time you all are responding. That's it. We file this. That's it. Issue is same. Next year again we go and write again. No. So once we find the common findings, we do the root cause analysis. We sit and discuss with the corporate management all the issues we cannot close with one go, but one by one we try to eliminate these common issues. So then our life also easy. We don't want to issue lengthy report. Your life also easy. Then and there you can rectify the issues. Then we set the target dates and rectify. Most of the things we can have a solution with the system-based solutions. So those things, being auditors, we need to do. You can, if that kind of a that system is not there, you can suggest to your corporate management as well. That root cause analysis we send to the board audit committee when we are presenting the audit reports. We highlight audit findings and also the root causes identified by the management and the solution to overcome them. So that's how we are doing the audit, this thing. So auditing, credit audit reports. If you have credit audit reports, please go and sit, look at what are the things, and then you can rectify. This session, I want to be more practical rather than theory because it's day-to-day life. All the time you are doing credit facilities, auditors come and recommend these things. So I just want to eliminate those things. Even though in this diploma you need to go back with some practical knowledge. So because of that only I sort of discuss these things. So any questions? And if anyone has any questions, you can ask. If you go to the practical recent case studies, the common case studies evergreening or draft facilities. So if when one customer's account is overdrawn, it will get settled with the other customer. So likewise, most of the time branch managers, they keep in set of customers, and in between fund transfers are happening. Then nobody come as a non-performing, but at one point that circle, if some breaches happen, then everything will go bad. So why branch managers are doing this kind of things? Not to show that their branch is having non-performing customers. So their intention is to show a rosy picture to the management, maybe for a short-term performance, maybe their promotion or the year-end performance bonus, but finally it will hit sometimes as bad as they have to sacrifice their job. So when you are doing not only branch managers, it can be happen at any level. So sometimes one customer has several OD accounts. So when it close to the month end, it will get settled by other OD account. Likewise, prior to 3 months, within 3 months, when it goes to the non-performing level, the set of people's current account fund transfers are going here and there. Now branches are doing internal audit monitoring from the back end all the fund transfers. Now what happened is cash withdraw and then deposit. Sometimes from one customer's account cash OD facility cash withdraw and deposit to a totally unrelated party. From that account only fund transfers happen. That kind of various type of things branches are doing, but all the things are very, very short term. So credit is very, very critical, but still to show that you all are doing a proper credit, don't apply shortcut. If customers that you all have analyzed customers, then granted credit facility. Now customer cannot pay. So what can you do? What can we do? So customer cannot pay. Show the picture as it is to the management. So when customers are not settling, you cannot arrange money lenders and money. You are the coordinator. Sometimes branch manager is the coordinator of the money lender. The money lender, based on the branch manager's word, they lend the money to the customer. So that series, when the everything is going smoothly, nothing will happen. The moment that person didn't pay to the refuse to pay to the money lender due to some reason, then only all the issues come out. So I'm telling that don't ever think that I'm sharing all the things in Sampath Bank. 1 year back only I joined Sampath Bank. Prior to that, I have a couple of banks. So I'm amalgamating all the experiences. Don't ever think that this I'm sharing Sampath Bank details. But no, general experience, as I said, there is a chief internal auditors forum. All the heads are sharing each experience. So I am sharing industry experience with you all. So the short term things will get come out at one point. So and your this profession, banking profession, don't ever like underestimate and don't deal with any like money lenders and that kind of people. So sometimes that people that get life threatening as well, and because of these people, and the most popular cases are there. Sometimes social media they exaggerate certain cases. You may have remember some time ago that there are paper articles that regarding some one branch of the Sampath Bank also some years back, board of directors should responsible, and those are exaggerating cases. But still, if you find the root causes, that certain managers they try to hide the real picture of the bank, and they have close relationship with these money lenders, and they are arranging those facilities. That when it comes to overdraft, that is common in all the banks. If someone bank think that no, we don't have this kind of thing, there are certain things, but still they may have properly managing. One point of time, these things come out, and the other thing is facilities again the third party FDs. When cashback facilities are giving, you can give cashback facilities against the third party FDs. So there was a in one private bank, there's a very popular case that the FD hold is not aware that that branch has given facilities against the FDs to uh, third parties. So those are billions. So that is also one common area people can play out. So you need to keep in mind, always you need to keep in mind that in your branch, in your area, there can be like that, like that 4,000, 5,000 staff members are there in the bank. In any bank, that kind of staff members are there. There can be one person, maybe 20, 25 people are there that they are doing this kind of thing. So because of that, you always need to keep in mind that anytime these people can get caught to this kind of activities. So and the facilities again third party FD is also one of the areas we have come across lot of fraudulent activities that happen. And when it's come to credit, that not because of non-availability of the proper building plan, when recovery actions were delayed, then recovery actions were not able to uh, not able to execute. So building plan is original availability of building plan is very, very important. So and good most of the time that the people do apply shortcuts when you have given a deposit or advance target. So people try to achieve those advances when you are given a target. So easiest way to achieve this target is by compromising the controls. So if you compromise your controls, then only you can achieve this target. I can remember some time ago personal loan target that first thing is you check whether the customer is crib listed. So that we noticed that one salesperson, that branches in banks, you have sales concept. So sales people, they have achieved their target. How they have achieved is they have changed the one digit of their NIC. So then they first change the one digit, then only take the photocopy. And you know that all the time people WhatsApp and all, then original identity. No one would check with the original NIC. When you are checking the NIC, you need to take the original NIC to your hand, then only you cross check. But without doing that, stick to their people just say original scene to the printout of the WhatsApp. So one digit has been changed. So that credit personal loan have been granted to so many directors of one company. So after that, they all went bad, and to see the original NIC number was wrong. So that is then branch had to that lot of things happened, but finally those were bad debts finally. And also the what some other thing is what the sales staff are doing is that sales target are given. If they achieve only, they are getting commission. So that is good concept, but controls must be there. So sometimes people form companies to get these credit facilities. At times we notice one time we noticed that one credit sales person went to a school, the leading school of the country, and so how much the teacher's salary, they are very low. But this person, that person had very good PR. Uh, First, he canvassed the secretary of the office. That in the principal's office, there's a secretary who type letters and all. So first, he granted loan to that secretary, and that through that secretary, they prepared the salary confirmation letter, putting a higher amount. So after putting a higher amount, then it's within the approval limit, minimum salary level. So all the teachers were received the personal loan. You know that if bank officer visiting to a school and telling that you all can obtain uh, personal loans, it's not a big thing. Just you need to provide the letter. I will give the format. Just type it and sign in school with the school rubber stamp. Then I can arrange. So all the teachers were taken the letter, the personal loans. You know that they cannot manage with their salary. How can they pay additional personal loan? Then that bank was looking at all the personal loan gone bad, and to see that this kind of thing had happened. So our people only give ideas to the customers, and just to achieve that person may have achieved their commission at those months. Finally, bank had to face non-performing situation at the end. And also there are professional loan categories are there. And for doctors, we are giving very good interest rate. So then people arrange the doctor and another person who actually need money. Through that doctor, loan goes to some third party. So doctor is applying the loan and at a lower rate, and the doctor is keeping a margin, some fee, kind of a referral fee, and facility goes to a third party. That kind of things also happening. When the third party default, then only doctor come and complain, I didn't get the loan. But the third party only has obtained, so I cannot pay. So until that time, doctor is aware and he has taken money. But the point the loan got bad, and then recovery officers try to reach them, then only they are coming up with all these things. So until that point, the doctors are that they are brainy people, but still they also trying to do certain people. I always use the term certain people, very few people in the country. They are using their opportunities, that vehicle permits are selling. Likewise, they obtain the facility, they give it to a third party, and finally they complain to the bank. So likewise, so many things are there. I can share so many cases with you all. So this credit, when you are handling credit, you should be very careful, very careful. And at the same time, being audit, I can say Those days, auditors walk into your branch and get the credit file and uh, was writing date is not there, signature is not there, rubber stamp is not there. That era is over. Now auditing is different subject. We have systems, we have system report, we can check entire portfolios, patterns, and volumes, anything we can check from the back end. So because of that, please educate your staff. You should be careful. And the other thing is, if some misappropriation done, some get caught within couple of days, maybe couple of weeks. At times, if that staff members are really, really smart, they can survive with number of months. Uh, if some can survive sometimes years, but still, anyhow, those will get detected. That is the 100% truth. No one can survive with the issues in the long run. Short run, all are happy, but in the long run. So only thing is sad part is the person that intention, the person who did intentional act. Not only that person, people unintentionally also get caught to those things. That is the sad part of the story. Finally, when it comes to disciplinary action, if you others are not seen and not detected those things, they also have to suffer. Like not maybe with their job, but sometimes they are getting warning letters, sometimes no increment. Likewise, those can be happen. It's a credit is very you all are doing a very risky this thing, but you need to follow all the procedures. So that is when the nutshell of the case studies. So credit auditing, my topic is credit auditing. Why I touch these cases, then only you can remember how important to obtain this documentation. So because of that only I touch these cases. So I have another case. Prior to go to that case, if you have any questions, you can ask. Otherwise, I don't know whether you get what you all wanted from me from the credit auditing side. So I can elaborate further on the credit auditing side, or I can explain with the case study. If someone speak out, so I'm not auditing you all, so you are free to ask any question, right? People think that auditors are very strict and all. No, nothing like that. We are normal human beings. So our job is auditing. Other than that, nothing else. We are paid for that. Uh, we also normal as you all as normal human being. I will give few minutes to ask any question. Any boys? Normally boys are asking questions here, very silent. Okay, no questions. Okay, good. Okay, I'll give the full case study. This is also happened in the industry. It's a real case. Uh, this came out, all are aware about all the banks are having whistleblowing policy. You know what is whistleblowing policy? Something happened, people need to inform audit to that specified authority. Sometimes customers also inform to the bank. The only tip, normally customers give only tip. So auditors have to study and find the real case. The only tip that customer has given is in this particular branch, that branch manager and the staff are dealing with money lenders. So if you are not taking any facilities from the money lender, they are not giving facilities to us. That is the only tip. So how can poor auditors like us find these things? But this, when we receive this kind of a tip, we never give up. We keep that in mind, and we do our analytics and data analytics. We visit the branch and look at. After receiving this tip, these auditors had to study 1 year time, that the period of 1 year. So then look at that. When look at the particular staff member's account, no abnormal stuff. So then auditors went further step. Then to see that if you can see the circle, the branch manager and credit assistants. This is the circle who are doing this transaction. So all are operating. You will also need to keep in mind that you need to be vigilant about your subordinate, your colleague. They always operating with their mother's account, their spouse account, girlfriend account. So if you go to further step, then you can see all the level of transaction. So then they have set of people who need money, and they have set of people who lend money. Then this is the inner circle. Branch manager only ordering. That branch manager's only motive is to show that bank has all the facilities are performing. There cannot be check returns to the branch, and no stop payment, and no non-performing ratio should be within the stipulated uh, guidelines. If branch has to maintain that non-performing ratio less than 2%, that branch manager's purpose is that. If customer loan arrears customer is there, then the call money lender. Money lender put to their one of the relative staff members, and then go to the borrower, and again go back. So money lender is getting an interest definitely. Not only money lender, these middle people also getting some sort of a benefit. So if you look at this, the transaction volumes of these people, that say that one person has used that person's mother's account, the transaction volumes are millions, like 300 million, 400 million. So some person will use that person's girlfriend's account. Girlfriend is working for a salon, but account volume is 300-400 millions. The other person, father was a retired person, retired teacher. That volumes are, that is also 1-200 millions. So once we find out this thing, then only we can identify the pattern. So always that loan arrears customers, OD settlement, for OD settlement, invert check payment, short term money required. So always they come to the branch and meet these people, then they will arrange this business. So this kind of things can be there in any bank, in any bank. I'm telling, can be there at any bank. We don't know what is the branch. So these things are happening. So once this get caught, so then this will break out. If we transfer these people, this coordination will break out. Then these people won't pay to these people, money lenders. Then what happens is these people come to the bank and they complain. Then only that, then finally when we look at, all the people have to go home. That a decision will be termination, not anything else. Because these people are telling that we gave money because of the branch manager. Branch manager will recommend these people. So based on branch manager's recommendation, we have given money. So now they are not paying. So what else we can? The bank has to pay. So this cases you may have heard in recent past. This is very common in the banking industry. Have you all heard this kind of cases in your bank? So then when look at the file, then once this kind of case come out, then when we are checking files, then when we can see all the documentation lapses. For certain documentation, instead of customers, branch staff have signed. So certain approvals are not there. So sometimes branch manager has not given any instruction in writing. So that when these people are trying to say based on branch manager's word only we did, so they can't prove. So sometimes branch manager can survive. These people have to sacrifice their job. So this case is very common. Please keep in mind. And if you come across something in your area, in your bank, please inform it to your internal audit department and follow the instruction of the whistleblowing policy. So then the another area that being auditors, I told you all that we are looking at the documentation, availability of completeness of the file, whether any fraudulent activities are happening, and from the back end we are checking, and over and above further value additions we do with the credit audit. We look at we highlight revenue leakages, missed out business opportunities. As said, internal audit is value-adding function to the business. So we introduce controls, then you can do your business smoothly. If there are any fraudulent activities we highlight, then you all are not facing any surprises and any huge losses. And over and above, we give recommendations the areas about uh, any income leakages, missed out business opportunities. For example, say that uh, sometimes in the system only interest calculate and all. But we noted that you go back your banks and you can see with the moratorium lot of manual adjustments you'll have to do in the repayment schedule. So because interest rate change and certain things we had to zero because of that. So once it came normal, that there can be system changes with the interest rate. So you can take a sample and check whether system calculate the accurate interest rate. Sometimes once we in between when we disturb to the system won't pick up the correct rates. So that kind of a things we from the internal audit we check. So sometimes you know that interest rates reduced to 9% during the moratorium. So sometimes there can be cases after moratorium period also 9% can be continued. So those things also you all need to check. So being auditors, we check everything whether there can be income leakages. Sometimes when processing fees can be some there are some branches they are not charging processing fees if it is not automatic entry. If they whenever there is a manual intervention, people can play out. So those things also being auditors we check. And also we recommend possible cost management initiations. Sometimes when you all are doing day-to-day activities, you don't have time to think about what are the high cost areas. So those things also we recommend being auditors. And always our job is to further improvement of the process and system efficiencies. As I said, sometimes when system is there, people keep on practicing manual processes. So anything and everything, if you can do through the system, we need to go to the system. Otherwise, it's a manual process. Sometimes that interest rate repricing with the FD rate changes, it should be automatically amend the cashback facility rate. Sometimes for certain facilities it could not happen. So those things you need to get sample and check whether these are happening. Whenever the manual intervention is there, so there can be mistakes and certain miss out. So your audit report will have comments if you miss these things. So if you can check these things, then you can eliminate audit comments. And the expectation of internal audit department, that people think that people think that internal audit is there to find faults and controls and all. But say that, for example, that if you go to the first picture, one branch one branch is performing very well, right? Branch is performing very well. They have achieved all the target, profitability and all, but lose control. In that case, so there's a vulnerability of happening some fraudulent activity or mistake. So because of that, we don't consider this as a correct situation. Your controls are loose, but performance are high. But that kind of situation, you cannot, that in the long run, you would fail. So today you can, that all will impress you, that you have performed well, you can be the best branch, but still, because of the loose control, something could happen. If you go to the third run, that performance are very less, but controls are very, very high. Say that uh, when with the audit, there are no comments, no high risk comments, but the branch performance numbers are very poor. Being auditors, we don't expect this kind of situation also. No point to have a business unit without doing business. Business unit to do business. If the perfect controls, with the perfect controls, the bank overall objective will not achieve. So bank objective, bank has given you a target, profitability target, advanced target. So if you are not performing well, even though you are getting very good audit rating, no point to have the existence of this business unit. So actually the best thing is you need to maintain a strike balance between control and the performance. So your controls also there, performance also there. Being auditors, we are expecting this kind of situation. Time people wonder that we would like to have this kind of third scale kind of situation. Full control, even though whether performance is there or not, we don't bother. No, nothing like that. Because it's very, very important bank to do business. Audit Audit is there to support to achieve this business and overall performance. So always we expect this kind of situation, the strike balance between controls, between processes and the performance. So this, I think I have has come to the last slide. So internal audit as a partner of the business. So we need to that auditing. As I said, the older generation, earlier era of the auditing is over. Auditing always auditing is we would like to create vibrant, agile internal audit culture through technology and innovation. What is agile auditing? We need to agile according to the situation. We need to change according to the situation. During the COVID, yes, we were not able to visit, but we alternatively we increased our central monitoring. Off-site auditing. Even though we are not visiting, we expanded our visiting through our verification through the center. So the checklist, once we visit to a branch or department, we have checklist to follow. So the whatever possible we can check from the center through the report, we started to check. If you take a branch, if I don't know whether this team have branch managers or branch officers, only very few items we cannot check without visiting. For example, if we visit, we can check, as I said earlier, the morning observation, whether your shelves are closed or open, files are in the outside, and the cash count, phone in packet count, and the check the accuracy of the carriage of the phone in. Those things we cannot check without visiting. Other than those things, anything else we can check from the center because we have reports, we have all the numbers, we can monitor, and we can check the branch open time and what are the transaction, huge fund transfers, and large withdrawals, what are the large deposit, and from the CCTV we can check whether you all are following dual control. Sometimes we can see that teller enter the transaction and run to the officer's PC and teller himself verify through CCTV we audited. So those kind of, other than very few items, anything else we can check from the center. That kind of expansion we did, we can do with our off-site monitoring and central monitoring because systems are strong. We have system, we have numbers. Whatever you do, it will record in the backend. Audit trails are there. So very like I know physical visit is very, very important. We need to have interaction. We can have a judgment after visiting, look at the branch setup and all. But still, we can agile ourselves according to the situation, so we can continue our audit function. And auditors must be always resilient, ready, and responsive. We need to respond to any situation, and we need to active. Soon after we get some information, we active and we go and we address that. And we always plan for the impact, not scenarios. I'm not for issuing lengthy reports, but to impact. We judge the impact. What is the impact? Something is there, so why? So that is not there, so what? We need to ask question. If something is not there, we need to look at the impact. Impact is high to the bank, risk-based approach. So always auditors are looking at risk-based approach. Always we select samples when it comes to credit. We some high value, we select some from high value credit facilities, but we need to cover the all the set of products. And also, if branches say that one branch is rapidly increasing credit card growth, or one branch is rapidly increasing their pawning growth, so we keep by it. Change branch to branch. One branch we may select higher number of samples from one product, but in other branch it can be differ. So it should be branch specific. So we always look at the impact, not the number of scenarios. And we always willing to listen to the auditee. So we would like to have healthy conversation, healthy arguments. So normally I will explain what happened, what we are following. We once we visit a branch, we have an exit discussion first. We come up with findings, as I said. When the documents are not there in the file, at the same time we show to the auditee, see, in this file these documents are not there. So at the exit discussion at the branch itself, we get the signature of the branch manager. These things were not there, but still we tell that if you come across, if you find these documents, if you can collect from customer, please inform us. So we have a exit discussion at the field itself with the branch manager. It's a very friendly discussion. We show our findings and we explain our objective. Our objective is to support you. If you run like this, you will end up with bad results. And we will allocate a couple of hours for that discussion. If branch manager is saying I'm busy with customer and all, we ask convenient time. If branch manager is convenient at say that 7 o'clock in the night or 8 o'clock, okay, we will give that flexibility. And we have, without having exit discussion, my auditors never come out from the branch. We have that exit discussion. Otherwise, misunderstanding can be there. So we will have exit discussion and we show our findings, on-site findings only. And we always tell, even though these are the findings from the branch, but we go back to the department and several other verification also will be done. Those findings also will be included into the draft report. So after this discussion, we go, normally branch auditors, they are given laptops, so they go back and they check the other things, and we release the draft audit report to the branches. To draft report, that at that time also branches can have a discussion. We give 14 days to respond to the branches. There can be misunderstanding, as I said, auditors also normal human beings, sometimes trainees also. Most of the people, they have background, qualification, chartered accountancy part qualified, but still they all are not expert. Sometimes they are expert for some other thing, maybe not for credit or operations. So there are 14 days to eliminate misunderstanding. Sometimes there can be miscommunication, there can be misunderstanding. So branches can come back and say, so this kind of a mistake is there in your report. So within that 14 days, they can eliminate, then they respond to the audit report in writing. So based on the responses, still, if there are no risk based on their responses, if we can reduce, we will reduce the risk. So after that only we are finalizing the report. So then only we are issuing the final report with the final rating. So even though sometimes branches are getting high risk audit report, so relationship with the auditor will remain because they know auditors are there to support, and not that is not a personal revenge. There's a lot to improve from our branch, so they will take the audit report very positively. That is culture we need to create. So we are towards that. So that kind of a close relationship you can create with uh, your audit department as well, and you need to get an understanding what auditors come and write. So the once I share this presentation, you can see what are the points auditors are checking, and it will be useful for your knowledge as well, and your practical implications as well. So that kind of a good relationship you all need to maintain with auditors, and you need to understand always without criticizing auditors. You need to understand why they are writing. So when it's come to credit is very critical. I have seen that audit ratings are deteriorating when it's come to credit, because I know it's very difficult to get down all the complete documentation, and very difficult to complete approving authorities conditions. So that kind of is there. So don't ever go to decide certain things on your own. Always get your superiors approval, authorization for your decision. So so that's what I need to tell about credit auditing. Since you all are, I thought that you all will ask so many questions regarding these things. So otherwise, that I thought I don't want to read out this presentation slide. Then now you can ask any question. We can have a discussion forum if you have anything. Otherwise, we can close the session. I will ask the institute to close this presentation with you all. Then you can read and understand certain things. So if you still have questions after that, this session also, you may if you refer it to me. You can ask my question through the institute. So with that, any doubts you can clear. Participants, it's your time to ask questions. Okay. If you don't have any questions, we can wind up the session. Okay. Thank you.